Hey, recording this video. It's Sunday, 29th of May 2011, Sydney time. Hope you're enjoying this long weekend. We've got Memorial Day on Monday. The market's going to be shut. We've got a little bit of Globex activity Sunday evening into Monday morning, and then we've got a trading halt after that, so things are going to be pretty quiet for a while. I said I'd do a very quick video on the multi-markets kind of view. There's a turning points, kind of setting up a whole bunch of markets. Just wanted to show you the charts on that. But before I do, just a little bit of housekeeping on the website Emini-Watch.com. I've decided to put up this as a little bit of a test. Next time you visit the site, after looking at it 2 or 3 pages, you'll be presented with a pop-up. Now, I know pop-ups are really irritating to a lot of people, but let me explain why I'm doing this. First of all, you'll only ever see the pop-up once, and you'll see it after a couple of pages, viewing a couple of pages on the site, and it's just kind of promoting the 10 Days to Better Emini Trading video series. If you've subscribed to that, just ignore this, kind of click the close button, kind of it'll disappear and kind of go away. If you're not aware, there is a 10-day video series that you can subscribe to, and that's kind of delivered to your email inbox over the course of 10 days with just kind of 10 recommendations to help improve your trading. But the reason for doing this is just in terms of kind of subscriber growth numbers on the website. I've got a little counter on the website that shows you how many subscribers there are to Emini-Watch, and at the moment it's just sitting under 3,700 subscribers, which, to be honest, is actually a pretty good number when you look at a lot of kind of the trading sites, particularly such a niche kind of market like the E-mini. It's a pretty good number. I'm happy with it. However, I get about 2,000 visitors to the website every day. 25% of those are totally new to the site, so it's about 500 subscribers and 500 visitors. Now, considering there are 500 new visitors kind of coming to the site, very few of them actually sign up and subscribe. And over the years, I've tried to make the subscription options a little bit more obvious and so on. And so I'm just trying this to see if it makes any kind of difference. I think there's good value in the site. If you're a trader, if you're interested in the E-minis or even kind of whatever forex, options, equities, all of those things, I think there's good stuff on the site. So I'm just trying to promote a little bit more. So if you do come to the site and that's what you see next, just bear with me. You'll only ever see it once. So I know people have an aversion to pop-ups. I personally do as well. I think they're kind of intrusive, but I'm trying as a test on the website. Okay, enough housekeeping. Let's move on to the charts now. A couple of things. First of all, with chart setups, this is what I'm doing currently in terms of looking at the risk on and risk off trades. I've got, you can't see this very clearly, but I'll bump these up. I look at 6 risk on trades, and I set them up in my charts with little windows like this. Obviously, with a small screen, they're kind of all bunched up. But when on my big screen, these kind of look quite pretty, and I can see kind of patterns as they develop across all of the markets because they tend to move a little bit in sync. So what I've got here is I've got crude oil, I've got copper, 2 kind of commodity markets that are very kind of sensitive to world economic growth. We got the euro and the Aussie dollar, 2 forex markets that are very kind of correlated with kind of high growth risk on type trades. And then we've got gold and silver here, precious metals, kind of their really inverse trades to the US dollar. So use those as kind of proxies to look at strength of the US dollar. And again, as I say, I set these up 6 little charts in one screen so that I can see kind of patterns happening. And at the moment, what's actually happening is all of those 6 markets are kind of approaching a cyclical turning point, kind of in sync, and I want to show you that. On the flip side, we've got the risk off trade, and I use 4 charts here, although it's set up in a 6 chart pattern here. The first one is dollar index, so it's the inverse of kind of the Aussie dollar and the euro. And then we've got the 3 bond contracts to look at. The 30-year, the US, which is symbol in TradeStation, 30-year bond contracts. We've got the 10-year notes and the 5-year notes here, TY and FV. And I've just duplicated the dollar index over here on the right hand side just so it gives me the same size of chart for each of these, which I find kind of easier to look at. But let me just roll through these really quickly just to show you what's kind of happening. And the first one here is crude oil. So we had our end of trend warning signal up here at $115 about a month ago, and we kind of fell off pretty quickly here. Now what's happening, and all of these kind of risk on trades have got exactly the same pattern. We've got the inverse pattern happening on the risk off kind of markets. We've got a cyclical turn happening here. Now we kind of fell off pretty dramatically at the 115 down to $95 here. We had exhaustion selling on the downside, and we've kind of bounced from there. But you can see the bounce has been extremely weak. We've hardly got up to $100. We hit 105, kind of came down. Kind of we got a little amateur up bar on Fridays with kind of the lack of activity there. And we've got this kind of turning point happening in the next couple of days. So I'm going to be very interested to see where this ends up. Particularly because we've seen this kind of end of trend warning signal pop up in the last month. Not that we've had kind of exhaustion buying kind of up here, but we definitely had a rush for the doors, back here where we had these huge kind of range bar downs, professional activity kind of on the way down with exhaustion selling. So very weak kind of bounce from there. So next one to look at is copper. So we'll go to that one. HG here. This one's kind of a really kind of much neater chart, and you can see copper back at the beginning of the year had a really nice pattern here. We had all these exhaustion buying patterns up here. First of all, we came into all these amateur up bars, Rambo patterns up here. Then we made a final push back up with a pullback and end of trend sequence here into a flush buying pattern. We kind of flushed out all the buyers at this point, and then the market kind of sold off. And so we're in a downtrend on copper. It's kind of most clearly illustrated here. We've had some bullish divergence patterns that have kind of caught some of these kind of moves down, but we've not had exhaustion selling on the downside to mark kind of the lows in copper. And as you see on copper here, we've also got a turning point kind of coming in over the next couple of days. So very weak kind of bounce again from the lows here coming into this turning point. So I'm looking for that to maybe kind of start to sell off a little bit harder. So let's see. Then let's go to the euro chart. Euro chart here. Well, euro kind of came into $1.50 versus US dollar here. We didn't have exhaustion buying on the upside, but we definitely had a rush for the doors, with these kind of professional 1, 2, 3 bars in a row. Profit taking right at the highs here, and then the professionals kind of sold this off really quick sharp, and we ended up with exhaustion selling on the downside. Now we've kind of bounced a little bit back up to 142, 143 over the last couple of days, bullish divergence, but again a few days off a cyclical turn happening here, and in the whole scheme of things this has been a fairly weak kind of bounce off these lows. Then looking at the Aussie dollar. Aussie dollar, we had exhaustion buying where we kind of came up, tested kind of a $1.10 versus the US dollar here. Coming into these highs, we've had our exhaustion buying. We had kind of amateur up bars, no supply stopping volume and so on. We started to sell off. Aussie dollar has been a lot stronger currency than a lot of them, particularly with the problems in Europe. Aussie dollar reflects kind of the strength of the Chinese economy and the commodity market. So that's been a stronger play kind of over the last couple of years, really. But we've come into this pullback level, bullish divergence right on the zero line here, and we've bounced quite nicely back up to 106, 107 versus the US dollar. And again, we're a few days away from a cyclical cross kind of happening here. So where that happens under kind of $1.10 or above it, whatever, who knows? But that's going to be showing some kind of end of trend warning signal here on the Aussie dollar. Then the next one to look at, let's go to gold. Gold, we went above 1,550, kind of up here, coming into these highs. A little bit kind of exponential move. It was really exponential in silver, and we got to some extent a similar type pattern in kind of gold coming up to these highs. We'd had our exhaustion buying, then we kept on powering through this end of trend warning signal to a flush buying signal, and then all of these bearish divergence signals till we finally kind of hit a top and we kind of sold off. Now on this move down here, you can see a whole bunch of kind of professional bars kind of coming into these lows, where they're kind of accumulating here and just kind of viewing that there's going to be or exiting, rushing for the doors. On some of these markets, for example, silver, when I show you that chart, you can really see a kind of a rush for the doors, and same with the euro. Whether there's some kind of accumulation happening here towards the lows, a professional accumulation is kind of, I think the jury's out as far as I'm concerned. But we've come into a pullback level, we've bounced from there, and again we're a couple of days from this cyclical turn on this market. And then silver. Silver, this was, went absolutely exponential. Huge move up here. We had our exhaustion buying, kept on powering through. Professionals taking profits as we went up to the $50 mark. Had a no demand amateur bar right at the highs there, and we sold off super hard. And then, we had this professional bar kind of accumulating down into 35. Pushed past the pullback level, and this was this point where I was talking about you never kind of buy the first wave of the set, this one here. that was too early to be getting into this move. Needed to wait for, we had a couple of down amateur bars into these lows right here, bang bang, and that was a good point to get in at this bullish divergence. We've had a very weak rally kind of in silver, and we're coming back up to this point where people tried to get in too early at $40, and again a couple of days away from the cyclical turn. So when you look at all of these kind of all together, when you arrange them as this kind of pattern, you can see all of these cyclical turning points are about to happen at the same time. And we've got the inverse of that happening in the risk-off markets. So here's dollar index. Dollar index, we kind of had exhaustion selling after our end of trend warning signal here, and we bounced from here. And I was talking about particularly on the commitment of traders data, you could see kind of bullish divergences there, and it's no surprise that we had, at this point here, everybody's saying the dollar was going to hell in a handbasket, and we actually bounced from here. Now the bounce that we got here with exhaustion buying at this point and all these blue professional bars kind of coming to these highs, is this rushing for the doors? Finally, the low was in, and the professional needed to buy into that move really quickly, and so that was what that was all about. And so we've come back down to test. It's actually been fairly extreme selling at this point here. If you look at the better momentum, that's been quite a strong selling point here. But again, a couple of days away from a cyclical turn. We're going to get one in all of these markets during next week. So at that point there, are we going to find kind of more strength in the next couple of days as we possibly move down? Are we going to see the professionals kind of stepping back in and holding this level? Then let's go to the US contract for the 30-year bonds. Bond market's been on a tear basically over the last few days, a few weeks in fact, and this is this whole pattern where I was talking about end of trend. We had a final exhaustion selling signal here, came back, amateur down bars, testing into this stopping volume, no supply pattern here, and we bounced from there. It's been a fairly good little rally. We had a bit of exhaustion buying at this point. We're kind of playing around cyclical turning points here, but blue professional bars kind of coming in. Although the risk-off trades have been kind of on a dollar index has been going down, the bond market's actually been going up, and the US, so the 30-year bond contract has been the weakest of the lot. When you actually look at the shorter term markets, so let's look at the 10-year, it's been very strong, broken above cyclical resistance here. We're definitely in an uptrend here, and this bullish exhaustion buying that we had at the beginning of the move here was setting this move off. It's kind of the counter to this exhaustion selling at this point here. The market kind of bottoms over the next couple of months, and then finally we get a surge of activity as everybody kind of decides, the professionals decide they're getting on board this move now and they need to get in, and they kind of push this move on. So it's kind of backed off a little bit in terms of bearish divergence, but we're in an uptrend on this market. And then you look at the 5-year. 5 years is the strongest of the lot. So here's this pattern, pull back to end of trend, exhaustion selling, came back in, flush signal here, amateur down bars trying to sell new lows, didn't happen, reversed and went the other way, and this is this kind of exhaustion buying at this move here where the professionals said we need to get on board this one now, bang, and the thing just takes off, and so we're in uptrend here. So in these kind of shorter term kind of bond contracts, we're definitely in strong uptrends, but the dollar index is kind of on the way down, so a little bit of an there's a difference in what's going on with the risk-off trades there, with the bonds being very strong. So what I'm saying in essence is we've got cyclical turning points on these markets. We've got kind of heading into resistance on the risk-on trades and heading into support on the risk-off trades, dollar index kind of trades, and that's going to happen during this week. So that's going to be an important point kind of going forward. So whether we see a continuation of the uptrend in equities for a couple of days and then a resumption of the downtrend, don't know, but all I'm saying is I'm looking out for cyclical turning points in all these markets over the next few days. So just be aware that could be a very important kind of turning point. Topping out patterns potentially in risk-on assets, and bottoming out patterns in terms of risk-off assets. So there we go. Hope that was helpful to you. Enjoy your weekend. I'm actually going to be traveling on Tuesday and Wednesday, although I will be trading probably Tuesday night. I'll try and see what I can do in terms of getting a video out on Tuesday, Wednesday, but just be aware I'm just going to be traveling down to Melbourne for Tuesday and Wednesday. So enjoy your weekend, and good luck with your trading next week.